What is going on, investors? Hopefully you guys are doing well out there. It is finally Friday. I always feel like that. And some Fridays, it feels even more like that. It's one of those Fridays. I'm excited. The weekend is here. It's a 3-day weekend for a lot of you. If you've got one of these real-time jobs and you're putting in those hours, hopefully you get Monday off like a lot of people do. And you've got time to watch the FAANG Stock Recap Show here on the Investor Channel, where every Friday we try to recap all the major news and the technical chart patterns from all the major FAANG stocks. Folks, we've got a TikTok ban just a couple of days away. What are the kids going to do? We've got Elon Musk rumored to maybe buy TikTok. He might even buy Intel. We've got Intel news. We've got a lot of Nvidia news as well. There was a lot of back and forth rumors, and if you just keep a level head with Nvidia and listen to the experts, you would have made money this week, and I think you're going to make money the rest of the year. Speaking of money, we'll kick things off like we always do. Meta Platforms. They are just 2 days away from a TikTok ban, and it started the week at 601, up 1.8%. You notice a lot of these stocks, 1.8% is not a lot because a lot of these stocks ripped even harder, but Meta finished the week at 612. Now, like I said, buried the lead a little bit, but we've got the TikTok ban coming on Sunday. Now, it comes 1 day before President Trump is inaugurated, and you've got some rumors that maybe Trump will try to cozy up to the TikTok founders, including the top boss is likely to be at Trump's swearing in ceremony. Also, Trump rumored to potentially sign an executive order, but I saw this, it might have been in this press release, but what I love is some people say, hey, an executive order is really just a piece of paper on some real nice stationery. Doesn't really do anything. And again, for those of you that are outside of the United States, even in the United States, if you forget how law actually works here in the United States, this TikTok ban is passed law by Congress, and it was signed by the president. It is now also upheld by the Supreme Court. Trump, for whatever reason, if he thinks he's going to do this, and again, with Trump, you get a lot of rumors and a lot of what he might do. What he might do and what ends up happening often are two different things. And so we'll see what he ends up doing here. But even if he signs an executive order, I don't think that's going to stop Apple from banning this from the App Store. I certain as hell don't think that Google will ban it, since Google has more to gain for it being banned than to leave it on its App Store. And so it'll be interesting to see what happens here over the next couple of days. We'll also get to the kind of the CHIPS Acts and chip bans and all those chip sanctions when we get to Nvidia. But the first week or two of the Trump administration will be rather exciting. Now, Elon Musk is rumored to maybe be in the running to buy TikTok. I don't think this was necessarily confirmed. I did see some denial, not necessarily from Elon Musk himself, but we'll see what happens. He certainly is one of the only people that could probably quote unquote afford this, but we know what happened to Tesla shares the last time he had to unload some in order to buy Twitter. If he has to unload some Tesla shares, that could create some pressures for the stock, could create some rumblings from investors not liking that type of thing. So we'll certainly keep an eye on that. Now, Meta is unrolling those community notes. This is where people can the users of the platform can fact check certain, posts and those types of things, but that won't apply to promotions. Sometimes when you're on X or Twitter and there's actually an ad with a community note underneath it, it's really bad for the ad. It's really bad for conversions, I'm sure, with the ad, but occasionally you see it. Meta not going down that route, as again, those people pay the bills, and I don't blame them. Now, Mark Zuckerberg is getting major aggressive, man. He is cutting 5% of the jobs at Meta. This is after I think they've laid off at least 25% of the workforce, maybe even it's higher than that. Over the past couple of years, they're weeding out these low performance. Now, this is goes back to the days, I think, of IBM or Intel. They would do this every single year. They would cut the lower 5% of performers, and it would basically create this kind of Games of Thrones, attitude inside of the company that you have to be a high achiever. And so also Zuckerberg on the Joe Rogan podcast, I think just over the past week or so, basically said that they won't need coders at some point. The AI is going to write the code, fix the code, and design new code, and they're not even going to need humans to do that. So he is slowly replacing all of those workers and getting rid of them. Now, moving over to Apple. Start of the week at 230, drifted sideways, and we'll call that flat for Apple. Now, the company is planning a, quote, iPhone revamp. We'll put that in air quotes because there's not a lot of details here. You might get an iPhone SE without a home button. I guess that's a revamp. You're going to get different types of MacBook Airs, but these are just kind of slight redesigns with a new chip. Now, if you're in the market for a new laptop, these M4, M3, whatever chips I think I'm on the M1 laptop, and it's still fantastic. Can't imagine what the higher end ones are doing. Maybe we get some new things like a new HomePod or the new device that's rumored that has a screen and can move and all these types of things. I don't know. I think it's going to just be another incremental year over at Apple. And look, that's good enough in a lot of ways. Now, the company is in talk with Barclays and potentially Synchrony Financial to take over its credit card partnership, currently in the hands, I believe, of Goldman Sachs. But Goldman Sachs has had lots of problem with that. You've had a lot of people default on their credit cards. I think it just hasn't worked out financially for them. I know in the past there's been rumors they've been talking to Capital One, they've been talking to Chase. Apple's trying to talk to everybody to take on this credit card partnership. We'll see who ends up with it. I don't think anybody really wants it, to be honest with you. Now, the company is tumbling earlier in the week by about 4% as shares were higher on a report that showed iPhone lost its top spot in China in 2024. We'll try to enhance this graphic here. Apple's market share in China went from 51.8% in 2023 down to 42%. Underneath basically all of the domestic providers, including Huawei, Vivo, Honor, and Oppo. Haven't heard of those companies, but they're absolutely eating Apple's lunch, and there's no sign of this, it appears, of turning around anytime soon. Now, the company is close, though, to verifying Taiwan Semiconductor's Arizona plant, which when Taiwan Semiconductor reported their earnings yesterday, they said that they are at volume production of chips outside of the Arizona facility. This is months before I think they were planned to do it. So hats off to TSM. They're doing a fantastic job in that Arizona facility. Now, we'll see what happens. We'll see if Apple verifies these. My guess is they probably will. And it looks like, according to Taiwan Semi, is the cost on the American chips made in the Arizona plant is higher than in the Taiwan plant, but there's obviously some benefits to diversifying the supply chain for these types of companies. Also, potentially tariffs coming down the road from Trump, and then it could even out the price. Also, Taiwan Semi said that while the cost is higher today, they believe in the future, the cost of the Arizona plant versus the Taiwan plant might actually be relatively similar. Now, ARM Holdings, which licenses technology to companies like Apple to make their chips inside of their phones and inside the laptops as well, they're considering hiking prices by as much as 300%. They're also considering making their own chips. And I think we'll put making in quotes because they will likely pass those designs and TSM will make them, but they will be, quote, ARM chips, very similar to Intel chips or AMD or Nvidia chips. Now, as far as my understanding, and some of you guys can correct me in the comments if I'm wrong, but I think Apple has a very unique deal when it comes to licensing with ARM, and that it was a, quote, lifetime deal dating back, I think, to the Steve Jobs era over at Apple, and it's very favorable to Apple. Now, that could get renegotiated. Maybe that price goes up a little bit, but it could be that if ARM raises prices by 300%, it could give a competitive advantage to Apple if that contract, which is rumored to exist, doesn't go up as much. Gives them advantage. We'll see what happens. Moving on to Amazon. Start of the week at 217. This one moved up like a Blue Origin rocket, up over 4% over at Amazon to finish the week at almost 226. Like many companies I am seeing, they're canning those DEI programs over at Amazon. Not sure if that means anything financially, but it could, I guess, in today's climate. Now, Teladoc Health, which is still a public company, it's I remember making videos about this company, just trashing Teladoc, and everybody would get in my comments, oh my God, they're going to be the future of healthcare. Well, its future is now a $9 stock. Looks like about $1.5 billion company, but they have partnered with Amazon. Amazon has tried to get into telehealth and these types of things, but it looks like they've got a little bit of their own proprietary. I think they bought a company called One Medical, which happens to do some of this stuff, but it looks like they've also partnered with Teladoc. Again, Amazon's got a boatload of employees. Some of this is just internal stuff. Now, Jeff Bezos was able to launch his Blue Origin rocket into a very first test flight. This is after I think he called off an inaugural launch on Monday. When I was at CES last week, inside of the Amazon booth was Project Kuiper, and I talked to the representative there. SpaceX is launching most of their satellites into orbit, but I would assume that Blue Origin, once it gets, more test flights and kind of goes into orbit and launching satellites and those types of things, I would imagine Jeff Bezos will probably throw his old company, or still his company, a bone and launch some of those satellites as well. Now, the company is just like Meta and all companies that we're looking at these days, laying off about 200 employees in its fashion and fitness unit. Now, moving on to Netflix. Start of the week at 844, up about 1.6% as we are on Netflix earnings eve. I'll show it to you when we get to the technical segment. I don't know the exact date, but Evercore thinks that the Q4 estimates for Netflix are relatively reasonable. The company will report their earnings next week. We'll obviously do a video about it here on the channel. In terms of the estimates, Wall Street's expecting $10.1 billion worth of revenue, or about 15% growth for the upcoming quarter, the quarter after next, so the guiding quarter. You'd expect actually a little bit less growth, about 11 to 12% growth, $10.5 billion. We'll see commentary from Netflix, probably on the Logan Paul fight, the impact of the NFL. So I suppose there could be some upside to Netflix as they had some very marquee events. They also had the launch of Squid Games 2, I believe, but that probably will affect the Q1 quarter, not necessarily the Q4 quarter for Netflix. So we'll see where these things turn out. Netflix, I think, could set up for upside surprise, as again, I believe Evercore here that these estimates are reasonable. And anytime you have reasonable estimates, there's always a chance the company can kind of come over and above them. Moving on to Nvidia. Start of the week at 131, bounced around, was under 130 for a minute, but finished much higher, up 5%. Finished the week at 137. We're still off the 52-week highs of 153 on Nvidia. Now, they trashed President Biden in a memo and kind of threw a bone to President Trump, as they said that the new outgoing rules from Joe Biden as it relates to chip exports into the country of China will derail AI progress for lots of industries. We'll see how this is like probably the top thing, other than maybe the TikTok thing, just from kind of a standpoint of this is really kind of interesting and it impacts a lot of just consumers and individuals here in the United States and really around the world. But the top thing I'm looking for is, will Trump come in and his first week address the chip export? Will he ratchet them up? Will he ratchet them back? This week, or today actually, on True Social, not something that I have up here, but I did see a press release here that he had a conversation with President Xi, and he was very complimentary and said he can't wait to work with him on different types of things. So he's starting out on the right foot, but this is Trump. He will say great things about you one day, and then the next day he's trying to fire you. So we'll see what happens. It's part of the allure, part of the thing that also makes people very upset about him. But as an investor and as somebody that covers this is like, dessert after a wonderful meal. We'll see what he does on the chip exports. And my guess and my advice is the first month or two of the Trump administration, I would be paying very close attention to this. Put down your TikTok. Put down all the stuff that doesn't matter in your life. Is not going to make you a dollar. Focus on this stuff, because if you get some of this stuff right, you can make a lot of money in 2025. Now, you had lots of back and forth with Nvidia, with some analysts saying that GB200, which is the latest Blackwell design, that is having production issues and it's causing risk to the company. Then Nvidia's data center customers basically not delaying orders. That is what I am seeing. There is no evidence, zero evidence, other than people coming out with these rumors without actually providing any evidence. There is zero, actually a negative number of indications that Nvidia's customers are pulling back on orders. In fact, really the evidence points that they are accelerating them. And if Nvidia could deliver $100 billion of Blackwell in the first quarter, they would all get sold, and they probably could do it again for the second quarter. Now, there was some technical stuff that got tossed around with Nvidia. You have this chip on wafer substrate S, which is the previous design. Hopper was based on this type of substrate. And we saw rumors. I was tagged in them. People let me know that, oh my gosh, chip on wafer substrate, this is going down. TSM is not ordering as much, and that must mean Nvidia's demand is lower. But no, actually, the advanced packaging needs over at Nvidia changed. Instead of chip on wafer substrate S, it's moving to chip on wafer substrate L. Now, you don't really have to know what this stuff means other than you have an S and an L. What you do need to know is that chip on wafer substrate, the previous version of Hopper, actually had higher production cost and the yields were lower, which means you had more error rate as these chips came off the line. Apparently, chip on wafer substrate L has higher yields and lower production cost. So it actually could mean that this is great news for Nvidia. They're moving away from chip on wafer substrate L, moving from S to L, and L has higher margins and higher yields. Both of those things were good for Nvidia. Now, Taiwan Semiconductor gave their Q4 talk. I posted a newsletter about this immediately after this, also did a video on this. AI outlook not only looks upbeat, but it looks like it's accelerating. Those are the things that you need to focus on, not people posting stuff on X. Now, speaking of X, speaking of Elon Musk, we have Intel. I posted a video a week or two ago saying I was bullish on Intel, and I actually bought Intel shares. Now, this comes from a guy. I could have just continued to pound Intel, as I have been right on this stock for really 5 years, saying it is not the semiconductor stock that you want to invest in. And I had people telling me at $50, $60, $40, $30, $20 that this stock was worth it. And I kind of waited until the bottom get flushed out on it. And we'll see with Intel, there are takeover opportunities for this company. And I think you see that. They put two just bodies in its CEO, like literally two people that don't even know what they're doing from a chip manufacturing perspective. These are like two economics people, like finance people in charge of Intel. That told me that, number one, that Intel was going to shop themselves around. And I think after Trump was elected, they realized they could sell the company. They could piece it off. Whereas in the previous administration, you might not have been able to do that. Now you might actually be able to do that. Sell the foundry to TSM. Sell the design business to Qualcomm or ARM Holdings or whoever wants it, or Elon Musk. And so we'll see what happens with Intel. The other scenario is they actually put a very high level leadership in its CEO. Both of those things will probably be bullish for the stock. Moving on to Google, start of the week at 188, up big time, up over 4%, finish the week at 196. And again, we talked about this with Meta, but it impacts Google maybe even more so. You got that Supreme Court ban, skeptical of those free speech argument, and we are 2 days away from a TikTok ban, and Google will be part of administrating that TikTok ban. They could, President Trump could sign an executive order being like, TikTok is not banned, but it'll actually be up to Google to decide what to do. And if I was Google, I wouldn't care what President Trump put on a piece of stationery. I would say this is past law and the Supreme Court upheld it. TikTok is not available, but YouTube is. And that's what I would do if I was Google. And I tell you what, over the next 2 or 3 days, this is going to be a hell of a thing to watch. Now, Google is scrapping its AI add-on fee. This is super interesting here. What these companies are seeing is they are not able to layer on AI as an added feature. Okay, so what they're going to do, we'll see this when we get to Microsoft, is Google has this workspace thing, which is basically like Microsoft Office, but it's with Google Sheets, Google Docs, and those types of things. What they wanted to do was a $20 per month add-on feed for artificial intelligence features. And they were thinking users would add this. But I continued to contend, and I talked about this in the newsletter that I sent out. The average person is not using AI. Now, if you're watching this video, chances are you use AI. You might use AI a lot. I use AI all the time. I'm using Grok. I'm using ChatGPT. I'm using them all almost on a daily basis. But the average person just is simply not doing it. So they don't see the value in an add-on fee. So what they're going to have to do is roll this in as a feature that's already existing and then jack the price up over time. In fact, I think they're going to increase the price by about $2 per month. So this is how the companies are going to do that. You're not going to be able to sell AI en masse. Again, we're talking about multi-trillion-dollar company. I subscribe to some very specialized AI stuff, something for like YouTube titles and YouTube thumbnails and YouTube ideas. I will pay for that on its side, but I'm a very specialized case. When it comes to Google, The vast majority of its workplace users do not want to use AI, do not want to pay for it. And so Google has to figure out another way to layer it in. Now, the company signed a deal with the Associated Press for Gemini and have a latest deal. This is one of the latest deals between these companies and a news feed. And this is why I'm using Grok quite a bit. Now, I'm not sponsored by Grok. Grok doesn't pay me, okay? But I use it a lot because it actually is one of the most up-to-date AIs. You can ask it about something that literally just broke, and it can break it down for you, and I'm using it quite a bit. Now, Google's Gemini's paid subscribers, they're falling behind ChatGPT and Claude. Again, that's what has most people in the AI community believe this might end up being kind of a winner-take-all, at least on the paid subscriber front. When you get users, power users like me, you watching, you're going to pay the $20 a month for ChatGPT, but you're probably only going to pay for one of them, okay? You're not going to have multiple of them. It would be like having multiple cell phone subscription or multiple internet connections. You're probably only going to have one, okay? And so it could be a winner take all, and the fact that Google Gemini is in third means they might not win that market. Moving on to Microsoft, start of the week at $416.69, up nearly 3%. Finished the week at $429 and some change. The company is freezing new hires in its U.S. consulting business with some minor layoff possible. I tell you what, who this is probably bullish for. I almost posted a trade video on this, but Accenture, if you pull up the chart of Accenture, it's a consulting firm, $220 billion. They've got close partnerships with Nvidia, other companies. They were also, they had a big booth and big presence at CES. And so this company's got its finger on the pulse. If you read through the conference call, it's incredibly bullish. The fact that Microsoft is laying off in consulting unit probably means Accenture is winning. Company is going to relaunch Copilot for Business with free AI chat and agent features. Again, what Microsoft saw was they were trying to get organizations to pay for the AI features over and above an Office subscription. What they noticed is they weren't able to do that. They were trying to charge $30 per users. And think, if you have an association, even of 100 users, okay, or 100 employees, $30 extra per month. You'd really have to see benefit there. And just not enough organizations were seeing that. It's also possible organizations were having employees use Microsoft in some areas of their business, but then they'd pull up their ChatGPT app or pull up Claude or whoever and use that on the side. So Microsoft's going to have to layer Copilot into the business for quote unquote free, but then continue to jack the price up over time. Speaking of jacking up price, they upped the price of 365 Family for the first time in 12 years, and they added AI. The price increase is going to be $3 per month. It's going to impact existing users on their next renewal and anybody signing up now. Previously, you were charged an extra $20 per month as an add-on fee for Copilot. They just saw people weren't willing to do that. So you're seeing these companies adjust very quickly. That probably has me bullish as we get into the back half of 2025, the revenue and also the demand. Think about the demand for these AI apps. And again, when we speak of demand, we're talking about Nvidia hardware. If you're just going to layer this on for quote unquote free and a small price upgrade, well, more and more people are actually going to use it. They didn't see the value when it was quote $20 per month. They were like, oh, I wouldn't do that. I don't need that. But now you layer it in for $3 per month and people will start to use it, mean more and more demand for Nvidia. Speaking of demand, my God, Tesla shares huge demand. Start of the week at 385. Wow, up 10%. Finished the week at 426.50. We're back to a stone's throw away from all-time high on Tesla. Now, they don't report normally they report earnings the same way of Netflix. I think it's a week later now. Company is offering discounts on some of its Cybertruck, including the foundation or kind of the initial series of Cybertruck. Those are $1,600 off. They've also offered me like free supercharging on these. They're really trying to discount these bad boys. And then they had demo vehicles. They're discounting $2,600. I would say if you're in the market for a Cybertruck, I would continue to wait. Just wait. I think the promotions, the interest rates, everything's going to get better. I would just continue to wait. Now, Tesla is valued at $2.5 trillion. That's according to Morgan Stanley's bull case. Currently, the company is sitting at about $1.3 trillion valuation, so nearly a double. And Elon Musk caught a lawsuit by the SEC over delayed disclosure of his Twitter stock purchases. Imagine overpaying for Twitter and now getting sued for the disclosures. Rough life. but I think we'd all take his bank account. Moving over to the technical segment of the show. We pulled back on the S&P 500. Now, if you want to really zoom in on the S&P 500, forget that we're in like, an all-time uptrend on this one. You will see we've just confirmed kind of a lower high, lower high, lower high. I would say even this candle here, not convincing enough. We'll see what happens next week when you get the first couple weeks or the first week of the new Trump administration. Will that trend right there continue? Continue means you're going to get rejected at this level, move lower. If you bust to a new high next week, well, I mean, that's basically what we're expecting because that's what's been happening for the past couple of years. Pullbacks in the S&P 500 back to 55.80. You guys know at this point what you need to do. Now, Meta reports their earnings on the 29th, so we're still 12 days away from Meta. They're setting up at the top of the range. That's what these stocks tend to do. They want to set up at a top or a bottom of a trading range as investors and options traders kind of place their bets before earnings. You get great earnings, you gap up, you move higher with Meta. You crap at these levels, and depending on what type of crap and what drives the crap, it actually could create great buying opportunities. Anything back into the 560s with Meta will be buying opportunities. And look, some of these companies like Meta could announce like major CapEx spending that send their stock lower. And in my case, that would actually be a bullish reason to buy. Apple has rolled over from making a new higher high. You have this purple line here. There should be an area of support. That has been support really since the summertime right here at 219. So keep a close eye on Apple. You're $10 away from kind of a decent buying opportunity. They report their earnings on Thursday, the 30th. Amazon, looking absolutely fantastic, has really just confirmed a new higher high. You will get Amazon earnings on Thursday, the 30th as well. And so you got some time there. Netflix reports their earnings next week. You will get earnings on the 21st. Just 4 days from now, that'll be on Tuesday, first trading day. I believe Monday is the great Martin Luther King Day. So I believe the stock market is even closed that day. Pullbacks in Netflix, particularly back into like the 720s, would be exciting. Nvidia's looking absolutely fantastic. I've talked enough about Nvidia. I think we're probably got a shot to be on this purple trend, which means you actually can buy it at these levels. Google just confirmed a new higher high and is floating around at that level. Nvidia, by the way, doesn't report their earnings till next month, so you've got some time. Google reporting their earnings a little bit later than most companies this cycle, at least from mega cap tech. They are Tuesday the 4th, so we got some days before we get on to Google. And then Microsoft, I actually bought shares of Microsoft this week. They report earnings on Wednesday the 29th. I bought shares right here, right in this 417, 415 range. You touch this gold line. In my opinion, this is the new trend that we're on. And Microsoft, if they report good earnings, could potentially move higher as well. And then finally, Tesla did find some support here at 380, which is kind of interesting because it was above, I guess that's above areas of support. But here we are with Tesla retesting this area at 430. Now, you're doing this all before earnings. Earnings Wednesday the 29th. A bit of a big day here on the channel next Wednesday. And we'll see what Tesla does in the after hours conference call with Elon Musk. You already have deliveries and you already have pretty solid estimates on what they're going to do. It'll be about, talk about full self-driving, talk about robo-taxi, talk about, maybe the first week or two of the Trump administration, different types of things there. The Optimus robot. We'll see what happens. You could get pullbacks in Tesla. The first areas down here in the 360-ish range is where I'm excited. Folks, that was the FAANG Stock Recap Show for Friday, January 17th. We've got earnings next week from Netflix, and then the rest of these companies report in the weeks that follow. Hopefully, you guys enjoyed today's video. Again, what I would advise you as we move into the Trump administration the first couple of weeks, a lot of policy shifts. So you want to keep a close eye on that. Put your TDS aside. You can make money. And if you make money off of Trump, that might cure some of the TDS some of you still have. Hopefully you enjoyed today's video. Back again next week. Good luck with your investment.